D1 is a subsidiary of the ClearScore Group, and it's a specialist in open banking services for the lending industry. So the benefits of open banking data for lenders are that they can use an additional data source further to what they would have done historically with traditional credit reference data. From the lender perspective, better priced products for consumers compete better for traffic in the market. And from a consumer perspective, it means that they get fairer access to credit at fairer prices. Credit reference data tends to be a view of your past management of credit. So if you've had credit before, how did you manage that credit? That's a good indication of how you might be likely to manage it in future. So the types of things you see in transaction data that are indicators of credit risk tend to be the ways in which people spend their money or the way that they manage their money that can correlate with being less likely to be able to repay back their credit. The D1 risk score is a proprietary model that we built, which looks very similar to a traditional credit score, but is a risk score built entirely off consumer transaction data. So that means it can be used to predict risk of people who have no credit history whatsoever. Well, the future of D1 looks quite exciting because what we're seeing is that lenders are progressively using more and more transaction data in their lending decisions. And therefore, what D1 does is make that data available to them in as many channels and in as many use cases as possible. So it's highly likely that as the market continues to adopt this stuff, D1 will become a key part of the whole ecosystem.